It's the start of the year, and that means it is time for my 2025 real estate market predictions. The focus of this video is going to be on the Fraser Valley real estate market that I service here in BC, but we'll also touch on the Canadian real estate market as well. And I always have a ton of fun doing these videos, but quick disclaimer, this is just for fun and entertainment. This is in no means actual real estate or financial advice. So let's not waste any time, we'll get right into it. Prediction number one is in regards to interest rates. So quick recap of last year, we had far more and far greater interest rate cuts than initially inspected. It totaled 175 basis points, bringing the overnight rate to 3.25%. And so for 2025, I'm predicting that we're going to see 75 basis points of cuts spread over probably 3 different quarter point cuts. Now, if you're not familiar with how interest rates work, when the Bank of Canada cuts or raises interest rates, this has a direct impact on variable rates, however, not on fixed rates. And so one of the biggest misconceptions that I hear all the time is the fact that just because interest rates are coming down, this is making money cheaper and that you can afford more. And so especially last year, what we were actually seeing is, yes, interest rates were coming down, but for the entirety of the year, and even right now for the most part, fixed rates are still lower than variable. Now we're pretty much right at that transition point where variable pretty quickly is most likely going to be lower than fixed. So just something to keep in mind. And something else to keep in mind is that the reason why the Bank of Canada lowers interest rates is typically due to economic struggle. So the worse the economy is, the further they have to pull these rates down. So it's a little bit of a give and take. Yes, mortgage payments are going to be lower, but it also means that the Canadian economy probably isn't necessarily in a great place. And so something to consider is that any disruption like rising oil prices or geopolitical instability could also force the Bank of Canada to pause cuts or even reevaluate its entire stance. Because if rate cuts are too rapid, inflationary pressures could reignite, and this could actually end up slowing down the real estate market's recovery. But we'll just have to see what happens. And moving on to prediction number 2, that is on inventory levels. So currently inventory levels are pretty healthy, which has prevented significant price increases over the past couple of months. As the year is just getting started, what we typically see due to seasonality is that listings start to come off the market as we get into November and December, especially just before Christmas, and even right at the end of the year, just because of the fact that people will typically have their listings expire on the 31st of December, just for simplicity. But there is still a pretty reasonable amount of inventory on the market, and we'll see inventory levels continue to rise into the spring. So my prediction for this year is that inventory levels are probably going to remain in the 6,500 to 7,500 range for the majority of the year here in the Fraser Valley real estate market. And if you've watched my previous videos, we need about 6,500 listings or more in order to have a healthy and more so balanced market. Now, when we start getting upwards of 7,500, 8,000, 8,500, it starts to become more of a buyer's market. So we'll just have to see where that goes. However, once again, what we have to pay attention to is that if we do have any sort of economic shocks like rising unemployment or higher borrowing costs, which I probably don't see maybe with fixed rates, this could push more sellers into the market. And I know everyone's been talking about this whole mortgage renewal cliff that we've been coming up onto last year and this year because of all these mortgages that are going to be renewed. However, I really don't think it's that bad, especially if you break down the numbers. Because keep in mind, anybody who got a mortgage 3 to 5 years ago was under the stress test, so they had to qualify at 2% higher than their contract rate. So is it going to make things more difficult because they're going to have higher payments? Yes, of course. However, I really just don't think it's going to be this big be all end all event. And something else that's going to help to increase demand and make it easier for borrowers as well as first time buyers and anyone else in the market realistically is some of these new relaxed mortgage policies from the government. So these are things like the 30-year insured mortgage. So you can get a 30-year amortization without putting 20% down, as well as you can also do this in the 1 to 1.5 million range. So previously, when you would have needed a $200,000 minimum down payment at $1 million, now it's only $75,000. Now, I don't see this making a massive impact towards the upper end of that price point, 1.3 to 1.5. However, I do think that the price point between $1 and $1.2 million is probably going to see more activity. And this is going to be that move up buyer that previously maybe didn't have enough down payment in order to make the move. However, now they'll be able to, especially if they're able to get some sort of a mortgage helper like a basement suite to help reduce those mortgage payments. Now, once again, what we do have to look out for is rising unemployment, because if this worsens, we could see listings rise to the 8,000 to 9,000 range. And so even though we're just getting started this year, I'm already seeing a lot more activity than the end of last year. So I think it's going to be quite a busy January and February, more so than normal. But we're also going to see more inventory come to the market. So it's really going to be this balance of, is the demand going to keep up with the supply? And more so than ever before, I am hearing a large number of people who are waiting to list until the spring. So it's going to be really interesting to see how all these things come into effect, all these opposing forces, and what direction that's going to push the market in. But in reality, I think, yes, it's going to be a busier start to the year. And then honestly, it's probably just going to become a bit more balanced as the year goes on. And then moving on to prediction number 3, that is sales volumes. And so firstly, I'll just touch on national sales predictions, so across Canada. And it's predicted that this is going to be around 480,000 total sales for the year. And this is slightly below the 10-year national average, which is 500,000. And so I think sales activity will remain relatively stable, but not exceptionally strong. This is really going to vary by market though. And so yes, it'll be up from last year and it will creep closer to that 10-year average, but nothing extraordinary. And then in terms of the local markets, so Greater Vancouver and the Fraser Valley, I definitely believe it's going to be higher compared to last year. And I also believe that it's going to return close to the 10-year average. And just for context, the 10-year average is about 19,000 sales per year. Now, last year we actually had 14,570. The previous year, 14,713. So it was actually about a 1% decrease, which honestly surprised me as well. But going back to a crazy year, 2021, we saw 27,692 sales in the Fraser Valley. So my prediction for 2025 is that we're going to see somewhere between 17,000 and 19,000 sales by the end of the year. So let's just simplify this and say 18,000. And then moving on to prediction number 4, that is the rental market. So both the rental demand and rental prices. And so a quick recap of last year is we actually saw rental prices fall about 8 to 10%. Some more, some less, in the markets around Greater Vancouver. And this was a bit of a shock to me, especially with how high the immigration targets were, but throughout the year and heading into this year, those have drastically changed. Now, I do believe this year will be a little bit stronger in the rental market, but honestly, at the end of the day, I think it's going to remain relatively stable. We'll probably be plus or minus 2% in terms of prices, and this is going to be due to the fact that we do have quite a few completions happening this year with new construction and a still relatively strong immigration policy. However, as I said, that is changing quite drastically. And so there's been a lot of talk around reducing immigration and foreign students and foreign workers. So those numbers should be coming down this year. And so we've really got two opposing forces, as we will have a decent amount of new inventory coming to the market, especially in certain areas. But at the same time, we're going to have those immigration levels fall. And that's why I think it's going to be a relatively boring year in the rental market. And so moving on to prediction number 5, the part of the video that everyone's probably been waiting for, and that's in regards to prices. So just a quick recap of last year, prices were relatively steady. They did increase by a little bit, somewhere between 0.5 to 3%, depending on area and property type, but nothing substantial. And last year we had a busier first half of the year with prices rising and then falling as we headed into the winter. And so my prediction for this year is that we're going to see a modest increase in prices by the end of the year. How we get there will be very interesting, but I think it's going to be somewhere between 3 to 5%, depending on the property type and area. And so I don't think we're going to have any significant price swings due to the fact that we do have a pretty balanced level of inventory. And as we are seeing demand return, as I mentioned, we're seeing inventory return. So it's pretty balanced overall. And as previously mentioned, I think we're going to have a busy first couple months, and what I would consider, and early spring market, and then things will kind of level out as we get towards the middle of the year. And so getting specific, just to throw some numbers out there, I do think it's going to be a stronger year for detached properties as we get to kind of the middle of the year. So I believe that we're going to see 5% appreciation for detached single family homes, 5% in the townhome market as well, and then only 3% for condos. And so there's a couple of reasons for that. Detached land, it's always going to be the biggest asset, especially with all this densification and multiplex zoning and everything else of that nature. We're really just not building more single family homes in the future. And so that's why I see the detached market continuing to increase in value into the future. Now, townhomes is that missing middle product. It's honestly kind of becoming that new detached home, what a detached home used to be, and that's what's able to house families. Because in reality, not many people are going to be able to just enter the market and purchase an average price point of $1.5 million for a detached home. And now with townhome prices anywhere from $700,000 to over $1 million, that's just a lot more attainable for your average family. Additionally, that's going to be both an upsizing market and downsizing market, as those with large houses, once their kids have moved out and are empty nesters, don't necessarily need as much space. So a lot of times they will downsize into a townhome. Now, in terms of the condo market, because of the fact we've actually had a lot of speculative pre-sale condo buyers over these past number of years, especially in 2021, 2022, that weren't necessarily planning on completing on their purchases. They just thought, hey, I've got 50 grand laying around that I can invest into this project, and I don't necessarily have the means to actually get the mortgage on it, but I'll just flip it, I'll assign it, make some money. And now they're realizing that that wasn't a very smart play, because they can't even sell those pre-sale condos for the amount that they paid. And so because of this, in certain areas, for instance, Surrey Central, where we're seeing a ton of these projects complete, people are panicking, trying to get rid of them, and nobody wants to buy an assignment right now. So it'll be interesting to see how this all plays out, but I think it will have some sort of an impact on the condo market, and that's why it'll be a little bit softer. But in reality, the overall demand in the market should counteract any of these negative effects. This will just be a very small blip in the bigger picture, but that's why I don't think condos are going to necessarily have as great of a year. And especially after the fact that last year they actually had the greatest relative appreciation compared to the other property types. And so to summarize everything as a whole, honestly, I don't think it's going to be that eventful of a real estate market this year. It might be a little bit boring, just kind of average per se, unless we see some sort of a black swan event. So these are things like geopolitical unrest or elections or other unforeseen shocks to the market. Of course, we are likely to have a Canadian election. Usually around the time of elections, things kind of slow down because of uncertainty, so it can create a bit of volatility. However, I think most people kind of know what's coming, and it's not necessarily going to have any major impact. But honestly, after the past couple of years, I never know what to think anymore. So many crazy things can happen that you just would have never expected. But that's about enough for me, and I'd love to hear what your thoughts are. What are your predictions for the real estate market in 2025? What did I get right? What did I get wrong? And where are things headed? And if 2025 is your year that you're thinking about making a move and you're in my marketplace of Surrey, Langley, or the Fraser Valley, or you just want to chat about real estate to see what your options are, I'm always happy to help. All you gotta do is scroll down and click the first link in the description to book a call with me at a time that works best for you. Thanks so much for watching. Before you get out of here, make sure you check out my video where I go over my 2024 predictions so you can see how right or wrong I was. I hope you have a fantastic 2025, and we'll see you in the next video.